Here are 10 common bookkeeping mistakes you can avoid. Number 1, mixing business and personal transactions. You could end up in trouble with the IRS if you do this, and potentially lose out on deductions. Even worse, if you're claiming personal expenses as business expenses, you could be committing tax fraud or evasion. We recommend that small business owners open a business bank account, apply for a business credit card, or have a separate card that's used just for business purposes only. And make sure to keep some money in these accounts to cover expenses. You don't want to end up paying business expenses with your personal money. It's just bad record keeping. Number 2, improperly categorizing expenses. Now, if you or someone you've hired doesn't understand bookkeeping, these mistakes can compound, potentially leaving incorrect transactions and losing on deductions. Guessing just creates more problems. And you can save time or money, but you can't save both. So if you want to save money and do it yourself, just make sure you take the time to learn to do it correctly. And if you want to save time, outsource this task by hiring a professional who can get it done right the first time. They generally can do it in a much quicker time, and it'll give you more time to make more money and have it pay for itself. Number 3, relying on accounting software. Accounting software is a great tool, and it can generate reports and organize your information. However, it's important to understand that the software doesn't tell you if you're using it correctly. So if you're going to do this yourself, just make sure to take the time to understand the accounting software. The software also doesn't help you understand or analyze the numbers. What's most important is what your numbers are telling you and how you can improve them. So even if you do accounting yourself, just make sure you get help from an experienced professional. That way you can learn to read them and make better decisions for your business. Number 4, not keeping receipts and records. When it comes to deductions, the proof is the receipts. And failing to keep these records or losing them could mean losing deductions when you're audited. You could also face additional penalties and interest because of lost deductions. So we have some tips to keep great receipts. Make sure you keep all the receipts in at least a folder by year. You can also use an online storage system like Google, Dropbox, or Box, and other cloud storing systems, and take pictures or scan them and save them online. That way, if you lose the records or they're damaged, you still have a copy. Digital records are just as good as paper records to the IRS. Number 5, bookkeeping inexperience. Now, bookkeeping is a backbone of every business, especially yours, so just make sure it's correct. Now, hiring someone who's inexperienced to help you with this can cost you more money than you think you're saving. 9 times out of 10, the least expensive route ends up costing you more in the long run. Bookkeeping errors can create significant tax implications. You could be deducting things twice, you could be deducting things that you're not supposed to deduct, and you could end up losing deductions and paying more in tax. So if you think you're not doing it correctly, it might be time to look for someone who knows what they're doing. You'll spend less money and get better results. Number 6, recording payments to yourself as an expense. Taking money out of your business for personal expenses doesn't mean it's a business deduction. Now, if you're a sole proprietor or a single member LLC and don't have a partner, you record the transaction as an owner draw or member draw, which goes on the balance sheet. If you're an S corporation, you should be taking a combination of payroll and distributions. Just make sure you're paying yourself a reasonable wage or salary before taking any distributions to avoid any potential audit chances. If you're unsure how to record payments, consult with a professional who can give you the guidance you need. Number 7, understanding sales tax. Does your business need to collect sales tax? But even some service-based businesses may need to pay sales tax, and it depends on the state you live in. Now, it's up to you to make sure you understand all of your business obligations. It is your business. And knowing what you need to do will help keep your business in compliance and make sure you still have one for years to come. Number 8, not tracking reimbursable expenses. Now, it's important to keep specific records when you reimburse yourself or employees for expenses so that they can be considered tax-free. One of the easiest ways to do this is by setting up an accountable plan. This allows you to reimburse these expenses and make sure it keeps them from becoming taxable to you or your employees. You'll be able to deduct these expenses on your business tax return, and you don't have to claim them on your personal. Number 9, not classifying employees correctly. You can have a combination of independent contractors and employees, but is the worker you hired considered an employee or an independent contractor? You should understand the difference between the two and make sure you're classifying them correctly. If you don't, you could face significant penalties and fines for misclassifying your workers. Number 10, Spending too much time on bookkeeping. You can spend a significant amount of time keeping your books up to date, and trying to do it all yourself results in less time to make money. Now, when bookkeeping's taking too long, you're probably wasting valuable time. You can leave the time-consuming, tedious tasks of bookkeeping to the professionals. They'll record everything correctly for you and keep up to date with accounting changes that affect your business. You'll have more free time to take care of your customers and focus on your passion, spend time with your family, and have a personal life again. For more information, you can visit us online at www.dkkaccounting.com. Thank you.